Hello, I'm Tim Beggins, president of Elk Trading Company. In this week's article, natural gas and LNG, this week's main drivers and the look ahead. We've got an image here today from the EIA showing the weekly natural gas storage report, which came in at plus 108 BCF versus expectations around 100 BCF. This week's main drivers. The natural gas market received a mixed set of signals this week. The EIA storage report showed a 108 BCF injection, essentially neutral versus last year's plus 110 BCF, but bearish relative to the 5-year average of plus 95. Storage continues to refill at a healthy pace, but upcoming injections are expected to moderate as summer demand increases. Weather remains supportive early in the week with above normal temperatures boosting cooling demand across key consumption regions. However, forecasts indicate a cooler pattern developing after this weekend, limiting near-term upside. On the LNG front, feed gas demand continues to strengthen as spring maintenance programs wrap up. Market attention remains focused on Golden Pass LNG, which continues its commissioning activities and gradual ramp up toward commercial operations. Nuclear generation is also approaching seasonal outage lows ahead of schedule, adding incremental power supply to the grid. Renewable generation provided a bearish offset with stronger wind output, reducing gas-fired generation demand across several regions. Geopolitical risk remains elevated. LNG and crude oil tankers continue to transit the Strait of Hormuz under U.S. military escort, while Russia demonstrated the viability of its Arctic shipping route as an icebreaker-class LNG carrier successfully completed the Northern Sea route and is now headed toward China. Energy markets remain range-bound with WTI crude, TTF, and JKM reacting to shifting geopolitical headlines and policy announcements. In the forward market, Southeast basis strengthened sharply as the latest heat wave highlighted ongoing regional infrastructure constraints. The look ahead. The market's focus is shifting toward tightening balances. EIA storage injections are expected to trend lower and remain below triple digits as LNG demand rises and summer cooling load expands. The Iran conflict appears to be inching toward a conclusion, but geopolitical risk premiums are likely to remain embedded in global energy markets. Spot LNG cargoes continue to be incentivized toward Asia, while Europe is expected to accelerate inventory rebuilding ahead of winter. Globally, low crude oil and refined product inventories should continue supporting commodity prices. Stronger oil prices may drive additional Permian activity, increasing the need for incremental natural gas takeaway capacity. A key question for U.S. gas markets remains whether Kinder Morgan and other midstream operators can successfully debottleneck constraints impacting Southeast demand centers and Gulf Coast LNG facilities. Meanwhile, China continues balancing energy security concerns by leaning on coal and renewable generation while monitoring risk tied to Persian Gulf supply disruptions. You can learn more on the article links we've included here. Please let us know your thoughts in the comment section below. Hit that like and subscribe button. Thanks for listening. We'll see you soon.